Welcome back to the Legacy Radio Network. I am chatting with Mr. Peter Schiff today. My name is Dennis Tubbergen, your host, and this is the Everything Financial Radio Show. Peter, we were talking about regulation and excess regulation in the last segment, and in your book, The Real Crash, you make a very bold statement. You state that the biggest and most important thing, I may be paraphrasing a bit there, that politicians could do to stimulate hiring would be to abolish the Medicare and Social Security payroll tax. Can you comment on that, and is that really something that could be accomplished?
Well, I mean, I'm not even sure if that's the best thing. I mean, that's one of the things that they need to do, because after all, think about what that tax is. It's a tax on hiring. It's a hiring tax. It's a payroll tax. If you hire somebody, then you have to pay that tax. So what it does is it increases the cost of hiring people, and the consequences are fewer people are hired. I mean, that's just basic econ, right? Econ 101. You get less of what you tax, you get more of what you subsidize. If you increase the price of something, you decrease the demand for that thing. I mean, everybody can see that. I mean, in our own lives, as things get more expensive, we buy less of them. As things get cheaper, we buy more of it. And so whatever the government does to make hiring people more expensive, it simply discourages people from hiring. And I also think one of the biggest costs of hiring people is the legal liability. The way society now, the way the legal system works, you are held responsible financially for all kinds of things that your employees do that are beyond your control. In addition to how easy it is for your employee to sue you if they're not completely happy with their work environment or things that go on at work, or maybe you let them go and they're not happy with the reason. They want to drag you into court. And, of course, court is so expensive and the laws are so tilted to favor the employee. Whenever there's a lawsuit between an employee and employer, the employer is automatically the villain. You know, and he's basically on the defensive trying to prove his own innocence. So we've so tilted the playing field in favor of the employee that the only thing that employers can do to try to balance it out is to not hire people. You know, and that's what's going on. And I think minorities in particular, we've passed so many laws against discrimination that so many small employers have no choice but to discriminate, because if they hire minorities, you know, they're basically sitting ducks.
Peter, it's hard to have a conversation like this without talking about politics. And in the last segment, I mentioned that you have been a political candidate and been politically active in the past. Give us your take on this current election season. Is there a presidential candidate that will pursue the correct fiscal policy, or are we just in for more of the same?
Well, I mean, obviously there was one in the Republican Party, Ron Paul, but he's not going to be the nominee. There is another candidate who's going to be running nationally, Gary Johnson, for the Libertarian Party. He would do the right thing. But the two major candidates, you know, the only ones that have a realistic probability of winning, Barack Obama and Mitt Romney, neither of them is going to do the right thing. So it's another choice between the lesser of the two evils. And in this case, if you want to choose the lesser evil, I believe you would choose Mitt Romney. But I mean, it's, you know, I don't have any pretense. I'm not voting for Mitt Romney. If I vote for Mitt Romney, I'm just voting against Barack Obama.
Well, that kind of sums up American politics from the discovery groups and the listeners that call in, that there's this huge sense of frustration. And you know, when you go back, Peter, to this you made a comment in the last segment that I thought was very interesting, that the people making or setting the policy are not economists, and they are just simply beholden to special interests. And I think that's very obvious. And as a result, these huge debt levels continue to mount. And the Federal Reserve's aiding and abetting this deficit spending by purchasing U.S. bonds with freshly printed dollars. When does the rest of the world say enough is enough and say, U.S. dollar, you're no longer the world reserve currency? You're seeing that shift start, but when does that switch actually flip?
Yeah,
and what happens?
You know, is the $64 trillion question. We can't answer it. I just know that the day of reckoning is a lot sooner than people believe. The numbers are just so big that we can't possibly continue on this path. And, yeah, the Fed is the big enabler. The Fed is allowing the government to postpone dealing with the problem by making it so cheap to borrow money. But eventually that's going to come back and bite us, because when interest rates rise, it's that much more problematic because the debt has grown so much. In fact, Ben Bernanke was actually asked about that in a senatorial hearing, and his response was that we shouldn't worry about interest rates going up, because even if they went all the way to 1%, it would only add $100 billion a year to our debt. So Ben Bernanke is basically saying that he doesn't think there's any scenario where interest rates in America would ever be higher than 1%, which is completely, ridiculous assumption to make, but that is the assumption under which we're operating.
Peter, give me your take. China certainly seems to be in for a hard landing. Their economy's contracted for 7 consecutive months. Meanwhile, it appears that China is accumulating a lot of gold. Are they setting up their currency to be the next world currency tied to something tangible like gold?
Well, if they're smart, they are. That's what I would be doing if I were them. I would be buying a lot more gold a lot quicker. I'd be buying gold mining stocks if I were China. But they know that the dollar is doomed, and they know that the main thing standing between the dollar and collapse is them. And so they decide when to pull the plug. And so I think they hold a lot of the cards, and I think they're trying to prepare for that eventuality as best they can. Whether their strategy is going to prove the right one, we'll see. I mean, right now, I know that their economy is suffering because of this huge subsidy that they're extending to the United States, and I think that subsidy is costing average Chinese citizens greatly. And the sooner it ends, the sooner a real, boom can begin in China that benefits their own citizens far more, because right now Americans are benefiting more from the boom in China than the Chinese, because we get all the stuff that they produce and we don't have to pay for it.
Peter, I read your book, Conquer the Crash, and when it was
that's
released.
Not my book. Conquer the Crash, I think, sounds like.
Excuse me. How to Profit in the Next Crash. I have interviewed Bob. I interviewed Bob Prechter.
Prechter. That's his book. My book was
Crash Proof. How to Profit from the
coming economic collapse. And my newest book is The Real Crash: America's Coming Bankruptcy: How to Save Yourself and Your Country.
I interview so many smart people. I'm sorry. I got you. But in that book, Crash Proof, you felt deflation was a likely outcome of massive accumulated debt levels. Do you still feel that way, or do you think the central banks of the world?
You're looking more at Prechter's book, but I think deflation is what we need. It's the natural consequence of inflation. If you inflate a bubble, when it bursts, it deflates. And so deflation would follow inflation the way night would follow day. But the problem is the government is able to intervene when you're dealing with fiat money. And so the government could always prevent deflation by printing enough money. And unfortunately, that is what's going to happen. I think that is what is happening. We do have deflation in terms of gold. So you can see the prices of stocks and real estate and even consumer goods falling when you measure them or pay for them with an ounce of gold. But if you look at what's happening versus, through the prism of a dollar or a euro, then you're going to see that prices are rising. And we're not going to get the deflation that we need. We're going to get inflation that we don't need.
What are you advising your clients to do to preserve their nest eggs in this environment?
Yeah, well, the same thing I've been advising all along is to prepare for the end game, which is a collapse in the dollar. Either it goes to practically zero, or we stop the decline at some point by aggressively raising interest rates and cutting government spending. But between now and then, I think the dollar loses a lot of value. So I think you need to invest abroad. You need to invest in foreign markets. You can avoid the other problem areas of the world, such as some of the European countries, but you have to find relative safe havens in this very tumultuous global economy. But you can find the safe havens, identify the countries that have less risk. I believe the currencies that have less risk than here. Own precious metals, own gold and silver, own commodities in general as a hedge against inflation. And, this is the advice I give in my most recent book. I've been giving this advice all along. And so far, we haven't had the real collapse that I've been anticipating, but I just think it's a matter of time. And every day we're closer to that day of reckoning.
Could you give the listeners your thoughts on some of the stronger currencies that exist worldwide?
Well, I think the currencies in Asia, especially when they stop intervening, like Singapore dollar, Chinese RMB, Hong Kong dollar, a lot of the Southeast Asian currencies, also the Scandinavian currencies, the Norwegian kroner, the Swiss, the Swedish kroner. In Europe, the Swiss franc is right now being pegged to the euro. Eventually, they're going to have to unpeg it and let the Swiss franc rise because it should be a lot higher. You've got the Aussie dollar, the Kiwi dollar, New Zealand dollar, even the Canadian dollar. There are some of the South American currencies you can own, and some other Eastern European non-Eurozone currencies. You spread your risk around in currencies. You be diversified. You never know which politicians are going to do something stupid. But I think that it's also important to have real money, because currency is just a money substitute. The real thing is gold, and you want to make sure you own that.
Peter, we have about a minute left. Care to give us a forecast for what you think the U.S. Stock market indices will do over the next year or two?
I don't think they're going to make much progress on the upside, or I don't think they're going to collapse. I think they'll, head sideways. But I think they'll go down in terms of inflation, specifically if you measure it in terms of gold, which is why I say that you're not going to preserve your wealth. The real risk is the bond market. When is that bubble going to burst? It's hard to say. It's long overdue, and so it could happen at any time. But you just got to be prepared. I mean, you have to be prepared in advance, because you can't try to react to the crisis afterwards, because it'll be too late. So it's better to be early than late, because it's impossible to do it exactly right. I mean, maybe somebody will get that lucky, but it's like winning the lottery. So you don't want to bet your life on winning the lottery. So you got to act more prudently. And I think too, it's important with precious metals that you steer clear of collectibles, numismatics, or any of these cons that are being promoted so heavily, on the internet or on radio, because people are just overpaying for their gold, and they're enriching the seller, at their own expense.
Peter Schiff, the book is The Real Crash. Would advise everybody to go pick it up, and I'm assuming, Peter, Amazon and all the major bookstores.
Yeah, you can go to Amazon, Barnes & Noble, pick up a copy of The Real Crash. It's selling pretty briskly right now, but buy it, get a copy for your friends. The more the better. We got to spread the word.
Peter, thank you for joining us.
Thanks for having me on.